Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Wednesday, November 1st, 2006, and the market's just closed with a little bit of selling today, finally. And let's go ahead and take a look at what the market did and where it looks like it's going from here. The S&P 500 I have on the screen right now, looking at the SPY, and you can see this big red candle here. Actually, again, this is what's called a bearish engulfing, meaning that today's range was completely outside of yesterday's range. It engulfed that range. Yesterday's high was 138.26. Today took out that high at 138.31, and obviously it took out yesterday's low as well. And that's typically considered a reversal candle, at least for a short term. I really don't put too much weight in that kind of thing. I like to look more at the shorter term time frames to kind of tell me where it's going for the next few sessions. But looking at the daily time frame, we can see here that it's just a pullback within an uptrend. There's nothing here at all that suggests anything otherwise. And so far, it's been contained by a rising 20-day moving average. We've got a 10-day moving average above a 20, which is above a 50. And this surprise shouldn't have taken anyone by this pullback shouldn't have taken anyone by surprise. I've been saying in here that it's been hard to find good low-risk setups, and that typically comes when the market's kind of adjusting for a change in trend, kind of. And yesterday I said, you want to take your foot off the gas in here. Take it slow. Protect the profits has kind of been the theme. If you listen to those videos I do for Wall Strip, we're looking at all these, stocks, Procter & Gamble, Harley-Davidson, American Eagle, and they're all way far extended to make good low-risk candidates. The idea in all these, Apple, Google, all of them, is protect the profits that you have now. Because they're not always going to be there, and they've been taken away quite a bit. So the S&P 500 on the 10-minute time frame clearly didn't hold that 137.50 that we've been looking at. And yesterday we were looking at this 5-day moving average, wondering if it was going to act as resistance. And we can say now that it looks like there are sellers in that area. Now, initially today we had that gap higher, but it quickly failed in here and got back down below that 5-day moving average. The direction of these moving averages is all lower. Now the direction of the 5-day moving average is lower too, and that tells us that it's no longer distribution here on this time frame, but it's actually a breakdown. And we saw this trend line broken. I'd actually pointed that on the Qs yesterday. We'll take a look at that. But yesterday I'd said that this time frame looks toppy, and in fact, you could say, is this a head and shoulders top in here? So we could take 137.50 kind of as the neckline, 139 as the high, subtract 1.5 points from there and come up with a target of 136, which still wouldn't do a lot of damage to this trend. 136 just brings it down to this area right in here where we've had some recent support. So if let's look at a 30-minute time frame and see if we can see anything significant near that 136 level. But this 136 level might be an area where it's headed to in the next few sessions, maybe by the end of the week. Market got a little oversold quick, short term at the end of the day, so maybe a little bit of a bounce, suck some people back in, find some resistance up near this 137.50, and then pull the rug and bring it down. Right now, though, defense is the game. It's always the game that wins, but it's even more so important right now. Semiconductors continue to be the area to worry about. From failed moves like we have up here will typically come fast moves, and this is really starting to look a lot more ominous. We've been looking at this 50-day moving average, the direction of it traded at 33.94, it closed at, then 33.96, 33.99 is where it closed yesterday, and 34 even. So the rate of ascent seems to be slowing, and I think one more down to neutral day probably ought to put this 50-day moving average sideways. I'm going to say I'm no longer giving the benefit of the doubt to the buyers. I'm officially saying that the trend in here looks like distribution. And what it's going to take to get me really bearish, even though I traded these on the short side today, but to get me bearish, to think that we can drop down towards 31.5 or so, is really breaking and closing below that 33 level. That's really what it's going to take to get me bearish. Now, we've come down. I mean, I am, mainly bearish on these, but to really aggressively get bearish on them. We found support at this 33.30 level or so 3 times in the last week. The more times support is tested, it doesn't become stronger, it becomes weaker because the buyers who live there get sick of buying it and they eventually walk away. The sellers get scared and then prices cascade through there. The only good news about this 33.30 level is that the tests come very quickly. We don't have a lot of volume being traded in there, so the buyers aren't filling big orders at that level. And I'm looking out of the corner of my eye, and I'm happy to see that Boom, it looks to be gapping down on earnings. I've still got puts in there, so that's a real good thing. That stock hopefully will get croaked tomorrow, but sorry for the aside. Semiconductors, though, a little oversold. Maybe another rally up towards that 33.60. But we're looking at 33.65 as the level where the sellers would come in. And lo and behold, once it broke that level, that's when the floodgates opened and we really saw that nice cascade lower in the semiconductors. Now the Qs, Nasdaq 100 Trust here, looking at the daily time frame. We've got still a great uptrend here. Nothing has changed on this daily time frame. We're testing this trend line. A trend line test doesn't mean it's going to break, but a lot of times the third test is the one that fails, so we have to be aware of that. We've got some support down here at this 41.60 level. That's the level that we've been looking at as the important level, and if it breaks below 41.60, then perhaps we can get a little bit more concerned about further downside. Again, maybe a little bit of a rally up towards that 42.20, 42.30, and then as it starts to roll over, I think it would make for a good counter trend short trade. The long-term trend is still up, so it would be against that primary trend, but the short-term time frame would justify a smaller than normal position as far as a short side for a trade with tight stops and the willingness to exit quickly if it goes against you. The MidCap SPDRs, these things just don't look good at all, at least on that time frame. And right in here too, they're right on the edge of it's looking like, we made a lower low in here. Now, if we rally up and make a lower high and then another lower low, I think we're going to come back into 140. If these stocks fail and break below 140 and close below there, I think on a weekly basis or so, then we could put this whole breakout in danger and bring that bigger picture into possibly failure. So continue to be real defensive in here, and this damn Boom is rallying again. Okay, let's take a look at the stocks. ARRS, we were in yesterday at 13.55, and I'd suggest raising your stop to $13.34, and that's what stops are for. So we took a small loss in there of about 21 cents. And CRDN, it's kind of funny. I was listening to my comments from yesterday. I said, listen, I don't have a position in this. I don't know when the earnings are due out. They could be due out tonight. And guess what? They did report them last night. This is why you don't hold stocks in front of earnings. If you're in this stock and you're looking at it with a big loss, you got no one else to blame but yourself, not me for bringing you this idea, because I've been repeating over and over again for the last month that earnings are due out on these companies. It's your job to do the due diligence. All I'm looking at the chart, and if you're holding in front of earnings, then you're taking bigger risks than you need to be. So no apologies from me for that one. If you took a loss, it's your fault. Ballard Power, we got in above $7 a share. I had suggested you raise your stop to $6.95. A nickel loss in shares of BLDP. SIGA, this stock, I was looking. I told you I was long a little bit. I bailed on it today. I was looking for it to break past 370 convincingly to add to the position. It didn't do that. I didn't add to it. In fact, I sold. So I have no position in SIGA. And I said the worst case stop probably was 30.42. It took that out as well, so I'm no longer going to talk about SIGA. Sun Healthcare from last night. We were looking to buy this stock on strength. Again, shows the danger of earnings. The stock was in an uptrend, but they reported earnings and the stock gapped lower. So there was no trade in SUNH. There was also no trade taken in TELK. We were looking for a move past resistance in there. That trade did not occur. No reason to be in it. MVIS, I was looking to buy above this level. I did get involved, but I also got out, I think, with a penny profit or maybe break even. I just don't think the market environment is right for these little speculative stocks when everything else is, when the bigger ones are going down. Although some of them still are. This WFII had a real good day. Unfortunately, it didn't pull back to 240, which is where I was looking for it to pull back to and then show some strength before I would purchase it.